The Financial Survival Network, helping you to survive and thrive in the new economy. To find out where to buy gold and silver reliably at great prices, go get your free Financial Survival Toolkit at financialsurvivalnetwork.com. You'll also get our complimentary newsletter. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote.
The Financial Survival Network, helping you to survive and thrive in the new economy. To find out where to buy gold and silver reliably at great prices, go get your free Financial Survival Toolkit at financialsurvivalnetwork.com. You'll also get our complimentary newsletter. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. If you're wondering, as am I, when are gold and silver going to start going up and what's going on with these stocks, there's only one person to turn to, and that is Peter Grandich of Grandich.com. Peter, hey, welcome back. How are you?
Thank you very much for having me again.
Always a pleasure. You know that. So you as disheartened as last time, or is there reason for hope?
I actually, despite the continuing onslaught of perhaps, I think, the worst bear market in the junior market in the 30 years close that I've been around them, I think there's actually more than a ray of hope, not only for them, but far more for the majors as well as gold and silver themselves. I think we continue to see positive divergences when you look at the charts, but more importantly, the gold and silver bullish camp has been emptied. It's almost a ghost town. The bearish camp is overrun and overcrowded, and yet the metal prices are actually averaging higher than they were a couple weeks or a few months ago, and that's a huge positive divergence. And I also think we now have 2 points that we can look at in the gold market and be reasonably certain if either one is broken, certain things will happen. And what I'm talking about is I think we have a defined resistance and support level. I think support is clearly the 1500 to the 1520 area, and if it broke below that for whatever reasons, we would have to say that, the bull market, for whatever reason, is in serious danger and likely to see a couple $100 decline. And the far more likely scenario is now that we've 2 or 3 times gotten to the 1640 area, if we can get 2 closes above there and say 1650, I think it's going to bring in a tremendous amount of buy-in. And this correction, which really began last September and almost ran a year, would be over. So I think for the first time in several months, we have 2 clear potential paths, and we should know how to act with either path, actually happens.
Well, you're almost sounding optimistic, Peter. I don't know.
Well, I've never been pessimistic about the gold and silver. I want to be clear. I'll be the first to admit I'm wrong if it breaks below 1500 and goes down to, some of these crazy predictions. But I've never come remotely close to caving. I've been extremely positive on the physical metal. Where I've taken a beating, perhaps a beating that I think many other individuals have, is we have exposure to mining stocks, and particularly on the lower end of the food chain, the junior resource stocks. And there, it's been somewhat of annihilation, and it's been very hard to accept because there hasn't been the usual things you can point to and say, aha, that's why. The metals didn't come down. The general stock markets didn't collapse. There's been nothing major upheaval to prevent or end funding in that area, yet they've lost anywhere from 50 to 70%. However, and I hate using that word, but however, when one looks at the TSX venture in the 20 or so years, there's been at least 7 bear markets. And this apparently is going to, go down as the worst one. And it's feast or famine. We're at the extreme now of the famine end. And for those fortunate that may even have some cash to work here, when these things rebound, they rebound 100% or more. So I would say that I'm cautiously optimistic on the juniors. I'm more optimistic on the majors, and I still remain and call it the mother of all bull markets for the gold.
Yeah, and when you think about it, what's changed? Did your government all of a sudden start spending responsibly and living within our means? And what about Europe? Did that all just come together and no problems there now? And the whole debt bubble that has driven gold for the past 12 years, nothing's changed there, has it?
No, it's actually gotten more favorable for it. I mean, I think a story that's not getting its deserving attention in the general media is how they're now talking about making banks make gold a tier 1 asset, and that would be classified as its most safe and secure asset, which kind of explains why central banks continue to be net buyers. And my personal opinion, this is just an opinion on speculation, that they have been and will continue to be shown to be that big buyers. I've argued, I don't want to say argue, but I've continuously stressed in these last several weeks that we've been in a 2-tier gold market. There's the physical market, where demand remains very strong, and on any sell-offs in the paper market, the physical market steps up its appetite. And then there's the paper market, which is mainly driven by the COMEX, where there's great debate, and I'm not here to debate it today on whether there's groups that purposely get together or act independently, but manipulate that market from time to time, both in the gold and silver market, and that the physical market will win out over time, that if you don't have strong physical gold buying, which we didn't have through the mid-1990s and the early part of this decade, and that's why gold didn't go anywhere. But it's been the strong and ever-increasing physical demand that slowly overtakes the paper market. The paper market wins some of the battles, but the war has already been won by the physical buyers.
Yeah, because in the final analysis, you either have the metal or you don't. And at some point, this paper tiger is going to be shown to have no claws or fangs. And like you say, the physical market is going to win out.
Well, in the end, that's what you would want in any type of market. I think the other thing that people are missing here, and again, when we talk to retail investors and to some extent institutional investors, because many gold buyers also play the mining / exploration stocks, because that end has been so beaten up, I think we've been more down on gold than it's deserving of. Let's not forget that these predictions that began several months ago from some notorious Burma bears, and then many new ones joining them, were all that we were going to be at 11 or 1200 by now. Go back and look at those articles and those predictions. They were all made from 1550 to 1650, and here we are as we speak today. We're in the middle of that range, and yet all these ever-increasing bears, I think we're going to start to see some stale bear short covering. I think many of the people that got into the bear camp are going to see gold get away from them, and that's why I believe it will happen when we get 2 closes above the 1640 area. I think that's going to trigger a lot of short covering, and that's going to help trigger the market to get back to where it was and see a much better second half of 2012, not only for the physical metals, but a very strong rebound in the mining shares.
And we certainly have not seen any good news on the financial horizon. Just last week, 15 major banks all had their ratings cut by Moody's.
Yeah, that's why it's hard to find a reason to say why one should change the opinion it had on gold in the last decade. If you look at all the things that hindsight have claimed why gold rose, none of those things have changed, and nothing's moved to the other side of the ledger. If anything, more things have come on the bullish side of the ledger. So that's the other reason for maintaining a very strong long-term outlook.
Yeah, and I look back and all the investments I made in the past decade or two, the only one that really worked out extraordinarily well was my metals investments. The rest of them, if I broke even, I did really well. But I think a lot of people, like you said so many times, this bull market for the metals is the most despised and barely tolerated. I mean, nobody has a good thing to say about the metals, do they?
Well, yeah, I've liked to call it, it's the greatest stealth bull market we had. You would think something that's gone up the percentage that it has, that if we grabbed any 100 people from any area of the United States in any investment group, not any one wealth or anything, you would find 5, 8, 10% of them have participated in the gold market, and you won't. North American investors, particularly U.S. investors, have almost been totally void of participating in the physical market. And that's why I still think until we see them in the market, and I really don't think they will come in the market until we break above that magical 2,000 number, then I think all heck will break loose. It'll be the final phase of the bull market, and it could go up several $100s from there. But it's when you see them coming in that those of us who have enjoyed it, like you said, for a decade, are going to have the realization that if they're coming in, we need to start thinking about getting out. But we're far, far away from that at this point.
Yeah, and from that standpoint, the past almost year's worth of weakness in these markets is really a good thing because it puts that day of the panic of the top off that much further. It's really just behaving like a normal bull market where it's not unusual to have these pullbacks.
Well, no, the correction in gold, if you can look at it from a much longer standpoint, was very in the confines of a typical correction. We moved from 1,000 to 1,900 in 18 months or so. I mean, that was a tremendous move. We've given about a third, in that area, typical pullback. We've consolidated long enough now to build a new base and a lot of the excess to move out. And now, we're getting to that point where it's time to move up again. So that's why I think the move will be above 1,640 versus below 1,500.
Yeah, and not to mention, and I don't like, from a standpoint of an individual investor, I don't really like to watch where the smart money's going because every time I've followed the smart money in any investment, guaranteed prescription for losses. But you see that the Paulsons, the Soroses, all of those hot big money guys are going back into gold now. Jim Rogers appears to be. So as much of an indicator as that can be, that certainly is favorable as well.
Yeah, and finally, I'll just say that, again, if you look back over the last 90 to 120 days of how many articles you just have to do a Google search on sell gold or gold is bearish and see all the people that came out and said and where they felt by now would be. It's kind of like a boxer that's been told that he really doesn't stand a chance and he's batted around, but come the 12th round, he's still in the fight. Many times or most times he ends up winning it. That's where I think gold stands now. I think we're pretty close to that level where it's ready to break out and resume its next leg up, which I think will be the one that eventually challenges and surpasses the 2,000 level.
And hopefully our boxer has still got a couple of rounds left in him, also has got a surprise knockout coming to the other side, that they're not going to see that haymaker coming to painfully twist and turn the analogy, right?
Yeah, and I'm sorry to say, but there's one that I wouldn't mind seeing suffering some pain because of the absolute arrogance of them. But, I don't wish them harm, but I do wish, but I know we're never going to see the financial media do realistic reporting on the metals, so we'll just have to take comfort in the actual result when it happens, and it's something that I think is a question of when, not if.
Hey, and you just raised a great point that I'm going to expound on a little bit. Financial media / mainstream media, credibility, it's getting killed daily. They're losing their brand. It's just all falling by the wayside, whether it's political reporting, economic reporting, or precious metals reporting. Doesn't matter. They're not telling the truth. They're hiding the truth. They're trying to support the Ponzi schemes that are in place now. And you as an investor, you as somebody who needs to really understand what's going on, you need to pay attention to the contrarians, because more often than not, they're the ones that are right.
Yeah, and finally, I would say that you can see that if you look at the viewership and say what I've always called the tout TV, CNBC TV, it just continues to decline in viewership. It's shown in a major decline, and that's because they have never, in my opinion, and I think obviously many others, and that's why their viewership has gone down, have remotely close reported balance in the financial markets. They have always been greatly tilted to the big financial institutions, almost having them on exclusively, always talking about how, good things are going to be, and they paid the price by, too many people being burnt listening to them. So I think to sum up here, I would tell you that I'm probably more optimistic on the gold since any time that we've had this correction, and there's a faint light at the end of the tunnel that we're finally getting towards the end of this terrible bear market in the juniors.
I wholeheartedly agree with you. Of course, neither of us is going to go out on a limb, which will be promptly sought out from underneath us, and say when. Just let's say we're guardedly optimistic, and you should be too. Peter, people want to learn more about you. Read your blog, get your newsletter, which is free, Grandich.com, right?
That's correct. And thank you again for giving me the opportunity to share my thoughts.
Hey, always open for you, Peter, and thanks again. And we'll talk to you soon. We're planning on having a Gold 2000 party, an online party all over the place, and you will be one of our honored guests.
Thank you very much.
Take care.